Welcome back. Well, in the past couple days, we've had two big inflation reports, the producer price index followed by the consumer price index. The red line here shows us the probability, according to the Fed funds futures, that the Federal Reserve will keep rates unchanged at 525 to 550, and the green line shows us the probability of an interest rate hike. Now, this is a little deceiving because earlier today, this morning, before the CPI was released, this was showing around a 96% probability of unchanged. That has moved. This number, this 87% before the CPI was around 96%. So it does show us two things. The leaning of the Federal Reserve, the tendency or the expectations, the Federal Reserve almost certainly will not raise rates in the next meeting. But the most recent inflation reports are kind of pushing against that. And we have an 87% chance, this is current, for the Federal Reserve to keep rates unchanged, and only about a 12.6, 13% chance the Federal Reserve will actually raise rates. But what's also interesting, the last time we spoke about this, the greatest chance, the black line here shows us the probability of an interest rate hike. Now, the greatest chance of an interest rate hike was at the December meeting, but now that has been pushed back. It's just slightly higher for the probability the Federal Reserve will raise rates. The best chance the Federal Reserve to raise rates is in the January meeting, January 31st. So the expectation of higher rates has been pushed a little bit back. What's also interesting, the green line shows us the chances of an interest rate decrease, of an easing of interest rates. Now, the reason we highlighted the June meeting is because that is the first meeting where there's a greater than 50% chance of an interest rate cut. Again, the best chance of an interest rate hike is January. The best chance of an interest rate cut is June. Now, the reason why we want to consider this is because with every subsequent economic report, we want to recheck these numbers and see if they've moved and if so, how much. For example, if we see lots of inflation come back and really giving the Federal Reserve pause to raise interest rates, we may see this black line shift. We may see the December meeting show us, well, a better chance that we're going to raise rates a little bit sooner because there's more urgency. But on the other hand, if we see a lot of numbers indicate that inflation is really kind of falling, and or maybe the jobs market is falling, the GDP is falling, that maybe the economic conditions are worsening, well, the chance of an interest rate hike may move further back or further, towards us. Meaning, instead of the June meeting, we'll see the expectation of a May meeting. But again, the first meeting where there's a better than 50% chance of an interest rate decrease is in June. And now the best chance of interest rate hike is January 31st. So between January and June is really our window in what the Federal Reserve is going to do. And obviously, we can extrapolate this out to equity markets and the broad-based economy. And we're going to keep a close eye on these probabilities, and we'll be sure to update you along the way with any significant changes. We hope this has been helpful. We look forward to seeing you back soon.